What we've done with this indicator here is create an indicator that actually tells you when a market is at an extreme. Now, when markets go to extremes, they're very likely to reverse. People are too greedy at the tops and they're too fearful at the bottoms. And these are ideal points to take a trade. So let's go through the indicator and have a look how we could actually use this. I've set up the indicator so it's optimized perfectly for a 15-minute chart, but it will work on any other time frame. You just have to do a little bit of experimentation with it. Unlike a stochastic indicator, which will be bounded by its absolute upper and lower levels, this indicator has no boundaries. So it's very, very good because you don't get that situation where you would be at an extreme and you would be thinking, oh, the market's going to turn here, but it remains at that extreme. This indicator continues to actually draw the extreme for you. So you know, once you start to peak and then start to go lower, you have a good possibility of a turn, provided you're in one of the extreme levels. So what are the extreme levels? Well, you can see here quite simply, if we get a little line and we mark the areas where the market has moved, or rather the histogram has moved into the colored yellow section up there, you can see that it didn't catch the first one, but if we have a look here, we can see that it very well caught that one there. So as the market then comes down, we're looking for price to dip into this yellow area, and if I come across, we had the first dip into there, got a small bounce, wasn't very much, but on this level here we got an excellent bounce, and we caught that, would have caught that trade all the way to the top there because the indicator produced an extreme at that level. Let's just move a line across and you can see that was a very good hit. Now when it fell, the indicator went down into the yellow area and then into the pink area, so you knew that was an extreme, and basically you would have got into that trade somewhere around there and you would have held it at least until this point here where the market made an extreme at that area. Now that wasn't the top, but it still caught the move all the way from that low to this top here, and I could go through this whole chart showing you where these turns are located. It's extremely good. You want to be buying or certainly looking for a buying opportunity when the histogram is in the yellow area, and you should be looking for a selling opportunity when the histogram is in the upper yellow area. Now it does also go into the pink levels, and you can see here that that pink level was an excellent top at that position, and now we are actually sitting. We've moved through the yellow area and we've moved through the pink area, and we're now at an extreme. So let's have a look at what sort of extreme this was when we project it back into the past and see what happened to the market. So what I'm going to do is take this high value here, I'm going to drop a red line on top, and then I'm going to go back historically until we see a histogram which was at that sort of level. So I have to go back quite a lot because it doesn't often hit that level. So we can see here we had a hit. Let's put a line in there and just see where that line actually came in from. So that was a perfect top. So that tells me that historically, when the market gets to this sort of level, I have a probability that the market might turn. So here we came to that level almost. So this one didn't work, but this one was absolutely superb. Had you just waited for those levels to be touched again, you would have had an excellent trade. So although it doesn't mean the market will turn, it means that there's a possibility that the market might actually turn at this point. So what can we do now? Well, let's have a look closer in at the price chart and see if we can actually set up the right conditions for a trade. So here on the right hand side of my chart, you can see that I've done a snap of a previous top, and when you are actually anticipating where to actually sell the market, you must always wait for your reaction to the downside. So if we look at this illustration on the right hand side, you can see that the market pushed up to a top, and then we had virtually an engulfing candle that took out almost all of the body of that candle there, and we came back down into this little wick area where we got a push to the upside. So let's translate that picture across to the left hand side of the chart where we are at the moment. Well, we've got this big push candle to the upside here, and this is where the sell-off actually took place. So although this wasn't a big push to the downside, we can see that that's where the market started its decline. So if we look across to this chart on the right hand side, you can see that we've got this black candle here, and that's where the market pushed back up into. So a good area to look for a sell trade would be the top of that black body just there. Now, it doesn't mean that that will definitely be the top of the market. It could go above, but you've got to realize that everything in trading is a probability, and what you're looking for is you're looking to put all the probability in your favor. And that means that we've identified that this potentially is an extreme that's been associated with a turn in the past, and now we want to establish an entry point with the minimum possible capital exposure. So your stop would have to go above there, and that would be a 9-10 point stop, and we'd be looking for at least a 50, 60, 70, 80 point target on this trade. So we know what we're waiting for. We have our price level, and I really encourage everyone to go and look at their historical charts and look at how price behaves around tops. This was a clear giveaway because you had this rather powerful push down here, and then when the market rebounded into this area, you get this lovely little tail wick that's formed at the top, telling you it doesn't want to go higher. So that's what we're looking for, and we just have to sit and wait for this market to retrace up, and then we look for an entry. What I've also done is I've put the higher time frame liquidity indicator on the chart. Now what this does is it actually draws small red dots when you start to come to a level that's associated with liquidity, and when you get a larger higher time frame level, you get the larger dots formed on the outer band. Now this is telling me that the lower time frame is syncing up with the higher time frame, and that's suggesting that the liquidity of the higher time frame and the lower time frame are significantly high in this area. So the other thing you can actually do in terms of looking for levels is you can also put a line up there just in case we go through this current level. But what we're waiting for is we're waiting for a push down and then a pullback back up. So here we are getting a pullback down, and so this might be a trade that we would like to take, but it could be that the market pushes up to this higher level, in which case we have to sit on our hands again and just wait for the first push down. So it's a game of waiting now, and we've just got to see what happens. As I knew there was some news coming out, I was reluctant to enter a trade, and it's a good job really, because you can see that the market spiked the former top, which was that one there, that's the one we were looking at, and it made this long spike. So now we have a little bit more information. You can see if we drawn a line through the red dot there, we would have been able to sell at the lower time frame liquidity, but to be honest, that's after the fact, and I'm not really interested in trading on a market that I can already see what's happened. I'm trading on the right hand edge, which is what you don't know. So now we've got this large wick which just took out the top, and I would imagine that that's an interesting area that the market makers went for. We can look at that a little bit later, but now we've got this formation of this lovely long wick. So what does a wick represent? Well, a wick represents demand that was unable to keep price up, and you get this long wick because buyers couldn't sustain prices up here and the market sold off. So what you can do with a wick is you can simply mark it, and that's what we're going to do. We're going to mark the wick with a box. Now we should really wait for the candle to close, but for illustration purposes you can see what I'm doing. So we give that a nice colour. Why not choose aqua, so it's very easy on the eye. And we're looking for a couple of levels in the aqua box. Provided this wick stays, we're going to be looking for the midpoint of the box for a potential level to sell off. Now, the only way, or the only reason rather, that we're doing this is because we've seen this wick. If that wick hadn't have occurred in this area, then I wouldn't be taking this trade. So we come back in another 2 minutes and we'll see, does this wick still exist? And if it does, we'll redefine the box and we look to trade at the midpoint of the wick. So again, it's another case of waiting. So now this wick candle has actually closed, we can actually mark the top and the top of the body. And what we're looking for is we're looking for the 50% level as an entry point because of this wick. So the 50% level is very easy, it's just here. And I'm going to put a line there because we want to see if the 50% level ties up with anything else. And you can see we've got this level that would be very close to that 50% level. 50% is just a guide, it's not set in stone, but the ideal thing is that if you have a 50% wick level, then it should tie up with something to the left or indeed inside this wick. So let's have a quick look inside this wick and see what's going on. So I'm just changing down time frames. And what we're looking for is we're looking for a push back up. And it doesn't matter what time frame we look at. You can even go down to the 1 minute chart. And we're looking for a push back into this wick level. And that gives us this level here. So I'm going to mark that with a little line. And that's also a level that I would be looking for the market to come back up to. Let's make that bolder. Now, of course, we don't know that this is going to work. And so consequently, we have to set our stops at a reasonable level. But if this does work, we can perhaps get into this trade with very, very little capital exposure, maybe about 20 points. So again, it's just a case of waiting for this market to come back up. And in trading, you will do a lot of waiting because things are slow. And even though that move was quite dramatic and fast, you can see that we're not looking to get into a trade until the market comes back to us. So I switched back to the 15-minute chart because the 15-minute chart is not too bad for looking at your levels. Now, you can see the blue line that we drew on the 1 minute chart. Let's just refresh our memory on that one. Just have a look at the 1 minute chart. And the reason we marked that level was because this is where it pushed back into this wick and it got rejected. So when I see something like that, that's also a good level for me, and not necessarily 50% of the wick. So as soon as I see this candle print down, I literally short the market, and on my prop account you can see that I got into a trade just here, a little bit late, but as soon as that, let's make that bigger for you so you can actually see it. As soon as that candle started to close as a down candle, that was my level there, and I just went short. Now, I've taken off half of my position at the last little low. Why? Because you want to get paid in trading, and sometimes the market doesn't do what you want. This might be the start of a larger move, I don't know, but the fact is that I take some of my trade off, means I still get paid even if I'm wrong, which is great. So where would I want to get out of this trade? Well, let's have a look at the chart here, and we can actually decide where we want to get out of a trade. Well, a couple of places you'd want to get out of a trade would be at previous resistance. So if we literally go down onto this market and we have a look at what's gone on, you can see very clearly here that you've got this level. And the reason I would be excited by this level, excited by a chart, I know it's strange, but the reason I would be looking at this level is that was the level where the market tried to push down, and what happened to it? It was bought up really strongly. 3 really strong, powerful bars into this level. So this would be a likely level for me to actually put the target on the rest of my trade, and that would be about 132 points to the downside. So I've got nothing to do now, nothing to do with the trade. I'm not going to touch it. I'm just going to leave it with a profit target down there and see what happens, and I'll come back to that later, or if necessary on Monday morning. Well, I hope you like this video, and I hope you see the power of this indicator that actually tells you when the market is approaching an extreme. And it's very handy to know that the market you want to trade is in a position that the possibility is, the probability is, that you're going to get a trade and you're going to get a successful trade. And as you can see, we had such an extended move. We should expect that move to certainly dissipate some of its energy by coming back to another level, and then we can simply put in a buy trade. So if we're looking for a buy trade, we want to see the market come down and the histogram start to print below the 0 level and start to print inside the yellow level, and that's really telling you where to get out. So although I had this as a target, it might actually come down and I might see the histogram print into the yellow or the pink level, and then I know, yeah, it's time to close the trade. Well, I hope you enjoyed this video. Please like and subscribe, and if you want a copy of this indicator, not a problem, send me a message, helpmetrade@gmail.com. You can see the email on the screen, and yeah, we get you a copy of the indicator, no problem. So you can see on the left hand side we've got the DAX chart, and we're right down at the black candle, which is surrounded by the two white candles. Now the black candle is a down candle and the white candles are the up candles. So this is where I had my take profit on my prop account. Just to show you, I'm actually trading this real time. Let's just bring that down now. You can see that we've got those two trades. The first one where I took partial profit. Also took a trade on the S&P 500, took some profit out of it, put the stop to break even, and then got stopped out for 125. So the winner of the day is the DAX trade at 2041.50, and that's propelled the account up to now 62,500. So I've got to hit a target of 6,000 on the account, and then I will qualify for the second stage of my prop account. So the nice thing is that had you followed the rules, waited for the trade, you could have seen here that we had the indicator showing you this was quite an extreme level. They spiked the top, simply waiting for that spike to form and then getting in to the trade at the likely point, having seen the spike, gave you a fantastic trade. And that's what trading's all about. Now these indicators aren't magic, they are indicators, a bit like a pilot flying a plane. You've got an altimeter, it tells you how far away from the ground you are. It doesn't mean that the altimeter flies the plane. You have to interpret that data. So when it says 0, your nose is in the ground. And just as this indicator says extreme, it doesn't mean that the market's going to turn at that point. You simply wait for the market to prove itself, and you'll do extremely well with these indicators.